Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest, who is a returning guest who has appeared twice before, and the last time was in October 2021, which was episode 178. So those that are listening, please go back and revisit that episode. So we have Daniel Major, who's the CEO of GoviEX Uranium, who are a mineral resource company focused on the exploration and development of its African uranium properties in Niger, and have two mine permitted projects in Zambia and Mali. Daniel is a Camborne School of Mines mine engineering graduate and has been at the helm of GoviEx since 2012, developing the company into the position to become a uranium producer in the near future. And he's here today to give us an update on the company and a little bit more about the uranium market in general. Daniel's going to be attending Europe's largest mining event, Resourcing Tomorrow, which is formerly known as Mines and Money in London, which is taking place on the 28th and 30th of November. So it's a great platform for the entire mining value chain, fostering learning, lively debates, and providing valuable networking opportunities. So please register now. There's a link below in the show notes accompanying this podcast to receive a discount on early bird tickets using the code DIGDEEP10. So encourage you to go and register and sign up to get a ticket now or after this episode. So that's welcome Daniel to the podcast. How you doing, Daniel?
I'm doing very good. And yourself?
I'm doing very well. This is a Friday we're recording this, and as we were speaking off air, I think we've both had a very busy week. So I appreciate you taking the time to have a chat with us. So for those that haven't listened to your previous episodes and may not know about you, although I think a majority of our audience do, just wondering if you just give us a quick, brief summary of yourself and of your career.
Yeah, absolutely. I'm a mining engineer. Went to the Camborne School of Mines when it was in Camborne. So it was that long ago. I have worked all over the world on every continent. I worked in multiple commodities. I spent time as a rated equity analyst as well. So I've had a thoroughly enjoyable 35 years plus in this industry. I've seen it change, but in many ways it hasn't changed at all. And that's because it's an exciting industry. It's always different. Every opportunity brings something else around the corner. I was chatting with my head of corporate communications, Isabel, earlier, and each of our companies we move through, things that make you learn and etc. Always different things. So yeah, thoroughly enjoyed it. And now doing uranium in Africa, so thoroughly enjoying it.
Yeah, great. So I just wondering if you can just give us a quick overview of GoviEX.
Yeah, absolutely. I'm going to have to correct part of your intro for you. Sorry, but yeah. So we have the two core projects are the two permitted projects, and they are Niger and Zambia. And then we have an exploration property in Mali. So we have the Madauela project in Niger, fully mine permitted. We had got the feasibility study done on that. We were just about to go into the due diligence stage for the debt side. Unfortunately, and we'll probably come back to it, there was a coup on July the 26th in Niger, which is obviously their coups are quite common in West Africa, but this puts something of a pause on the process on moving forward on the debt. So we can come back to that. We have a project in Zambia called Mutanga. We're currently finishing the feasibility study on that one. That will then go into the financing. So it's about developing new projects. The uranium market is absolutely flying at the moment. I mean, we've been talking, those of us feel like broken records, talking about supply and demand fundamentals changing and improving, tightness in the market, declining inventories, all these good things. And then finally, the clock is right and it's absolutely flying.
Obviously, that's. I suppose we can start there with obviously the uranium market. Like you said, it's flying at the moment. Uranium prices have sort of jumped 12% over the past month, and rising to the highest levels in 12 years, which I believe is definitely needed. What is really the driving force behind the rise in the uranium market, and why is it happening right now?
Well, one, we've just been through an 11-year bull market, so the best thing for needing to get prices to move up is low prices, and then ultimately they will react and change. We had to work through inventory as an industry. We had to see a turnaround in public sentiment for nuclear, and to see that turn from decline to growth. So if you look at the demand side, you're now looking at a scenario where we're looking at between now and 2040 over 4% per annum growth in the nuclear industry from demand. It's become very clear that nuclear has to be a part of the base load power. If you want clean energy, you can't do it with renewables alone. And certainly, if you want it to be commercially viable, you can't do it with renewables. Renewables are actually more expensive if you account for the other power source that you need, or the batteries that you need, when the sun is not shining and the wind is not blowing. Then nuclear assets are long life assets. I mean, the US is looking at 80 years, potentially 100 years for nuclear reactors to operate. So, you get a great return on your capital at the end of the day. They're very safe. And we've got the development of the small modular reactors now. Big reactors are 1,300 megawatts, put it in the same terms. Small reactors go down to 10 megawatts. And obviously, if you want to replace a 300 megawatt coal-fired power station, why not just put in a 300 megawatt small reactor instead? The grid's already there. So we've had this political shift. There's also a lot of link to this behind security of supply of your energy source. If you're relying on bulk type, or whether it's coal, whether it's gas in Europe or oil, those are big volumes. So you can get a very small volume for uranium, and run a large power station for a considerable period of time. So access to your material, your access and removing security of supply is another big aspect for a lot of jurisdictions as they go forward. And also the pragmatism of, you need critical minerals to do renewables. You don't need critical minerals to run nuclear power stations. And so all of the things that we're looking for actually generally are available. The issue for uranium, though, is while there's a lot of it around, it's in the seawater, it's everywhere. It's getting it at commercial levels. And so on the other side of that, we haven't seen any investment since 2007, 2008 into a new build. Old projects are coming to the end of their lives. We consume about 190 million pounds of uranium a year. We produce 134 million pounds. So we're filling a gap by using up inventory the whole time. Well, you can only take things out of the cupboard for so long, and then the cupboard becomes very bare. On top of that, you've got the risk coming through from Russia and everybody trying to avoid Russian material. That's had an effect on the downstream part. We have to process our uranium we mine through various stages. Now, most of that processing is actually done, that conversion and enrichment is done in Russia. So we've seen a real switch away from that. That has put tightness on the enrichment side. So those guys are having to work harder, which is even using up more uranium. So on the supply side, on the demand side, more pressure. The supply side is under a lot of pressure as well. And we needed higher prices to be able to motivate new projects. If you look at the WNA, which is kind of a more neutral forecast, that they kind of come by mutual agreement to a number. But what they're saying is that even if every project comes on that we know about beyond 2020 to 2028, there isn't enough material potentially mined that can come on after that. We don't know what the projects are that are going to fill that gap. And I think the other thing that's been highlighted, the coup in Niger being part of it, where the Cameco's suddenly announced they can't get their production for this year. They're down 3 million pounds, which is about 10% of their production. You look at another project called Peninsula, who's suddenly a year late because of contractual issues. And then even the production that's due to come, there's no guarantee it's going to get there. These are mines. And so that is now starting to force it out. If you just spend $10-15 billion building a nuclear reactor, you don't skimp on getting the fuel. You make sure it's fueled up and running.
Obviously, we just spoken about the price has sort of risen just recently. When do you think the next leg up is? Obviously, I hear a lot of commentators say that uranium needs to get to £70, $70 a pound to sort of incentivize it, or maybe a little bit more than that. When do you think that next leg up is? Or and again, I'm not asking for specific dates, but what is the driving force to get that next leg up?
Well, and there's two parts to this. Obviously, is the spot market and there's the contract market here as well. And the contract market reports monthly. It's still actually on 58. The spot market's up at 66, 67. And again, they're very different. One trades only a small volume, and it's for the now delivery. That spot market is going to continue to trend up. I mean, it's got probably got quite a long way to go still. Where that peak price for contract is probably somewhere between 65 and 70. If you can contract out mines at those levels, there's a lot of projects around the world who can come on stream at roughly those prices. As I said, even if you put them all in, it still doesn't fill the gap. So, there is that potential to go even further than this. The knock-on effect that comes through this that we all have to remember is that whatever price nuclear reactor companies pay for their fuel ultimately converts into a power price that you and I pay every time we turn our kettle on. So there is that balance that everybody has to find here between what you pay for uranium and what you're going to pay at the power. And obviously in countries like the US, where they're very regulated on power, that price has got to be dealt with. But yeah, definitely going to go higher. Contract market's still got to make that final move. Spot price, we saw 140 in the last big cycle. Who's to say it can't do that again? We'll watch. But we're excited that now both of our projects are doable at the current price. So for us, it's great. We can now get both of our projects up and going. So for us, it's try and get them to that stage as fast as possible.
Obviously, you mentioned the coup in Niger. Why are you in a better position than some of your competitors? Obviously, why that event was going on?
Well, because there's two projects. So most companies that we deal with and our peers only have one project within their basket, and that's the project they're trying to develop. So if something goes wrong in their region, whether it's social, whether it's political, whether it's environmental, we at least had that ability to switch sides if we needed to do that. And we're now able to make sure that our Zambian project is pushing forward while we wait to resolve what is going on in Niger. We keep pushing forward on that, and it's in some ways it's kind of helped us, because now people were so fixated on us just being Madauela. Now all of a sudden they're realizing what we've been telling them, which is actually, guys, we have this really, really good project down in Zambia. It's very straightforward. It's an open pit heap leaching operation, very low acid consuming, very low milling costs as well. It's easy to break. I mean, I've got a video of a guy just stamping on the rocks to break them. So, I did say that's probably more expensive than milling, given his consultancy fees. But when it comes down to keeping your unit cost down for production, these are all positives for the project has to go to the next stage. So for us, we'll just move that one forward while we wait. And then ultimately, hopefully we get two projects, and that helps as well. When you're looking to contract your material, you're contracting to deliver from a mine generally. But if you're able to say, well, I've actually got another mine, so if this one's struggling, I can make up my volumes somewhere else and cover over, which makes you a better supplier to the customer.
Could companies such as obviously yourself actually benefit from a coup, as less material in the market could drive up prices?
It will have an impact. Interestingly, Arana, the only producer at the moment, had just shipped before the coup. They only ship on a quarterly basis. So depending on how long it takes for this coup to resolve and give everybody comfort and the borders to open, it will depend on how long that material comes through. If it's extended, Niger is 25% of all Europe's uranium supply comes from Niger. And so it'll have to be offset. And they'll have to find that material. If it's extended for a very long period of time, then yes, it is the seventh largest producer. It's only 4% of the total market. But when you're in a market that is already in deficit, anyway, any loss of uranium is felt through that market. So yeah, we need Niger to get resolved and production to come back out of all of the projects there.
You recently did a video on Twitter saying that at current valuations, investors would be getting Mutanga really cheap and your other project, Madauela, for free. Could you tell us a little bit more about the Mutanga project?
Yeah, so I'm saying that's the really simple one down in Zambia. It's got a NPV at the current price. In fact, it's 66, which is lower than the current price, of 189 million US dollars, and our market cap $70 million. You know, I think we can improve on that project in the way we're going forward on some of the engineering that we're going, but you know, only time will ultimately tell. It's got bigger. We released a new resource, so we got more pounds in the resource. We got a better grade out of the resource. These things, as you can appreciate, help the economics of a project as well. And with the higher price, we used 58 and now it's 65. So these are all good things for us. And here, as I was saying, you know, we're now trading at like 0.38, 0.4 times our NAV. Well, that doesn't even include our Madauela project. So if the coup in Niger comes to a point of stabilization that we can go back to our financing discussions, then that should give us a massive uplift. And I'm quite optimistic we will get to that point in that country.
Do you think there is a way to accelerate the Mutanga and develop that first until the situation in Niger sort of stabilizes?
Yeah, I mean, we go as hard and as fast as we can. I mean, obviously, you've got to be sensible about your cash flows as well here. You also don't want to just skip things just to be fast. You know, you're making a commitment for a project that's got to last 11, 12 years with exploration upside. You know, we've got to make sure all aspects of that project are there, including people. We started an adult education program earlier this year to make sure that our local population could access the jobs on the mine because the skill sets were not there. So you need to have that time frame to be built in. But yeah, we go as fast as we can on this. And I think as we go to the next stage after the feasibility study, subject to those results, then, you know, what was clear when we were looking for the debt financing for Niger is that Zambia is probably going to have a wider scope of lenders potentially for it, because a lot of the SADC banks won't go as high up into West Africa. They very much stay in the SADC region.
In the past, you've talked about ESG and how you're formalizing ESG at GoviEX. Why is ESG important for developers like yourselves who are not yet producing?
For a whole bunch of things. We start with ESG not just on a day-to-day operational point of view. We even put ESG into our project. So whenever we kick off a project like the Mutanga project, the first discussion is actually ESG. It's like, what are the ESG issues that we're going to have to deal with here? Whether it's environmental, whether it's social, whether it's governance. That's the first conversation we actually have, and then figure out what those risks are. And then we do very much part of our design process is clearing out those risks and mitigating those risks. So we very much take our whole concept from that point. You obviously have it on a day-to-day, and you know, ESG is not new. I mean, we've all been doing it in the mining industry for a damn long time. In fact, ever since I've been in this industry, you know, it's nothing new about it. It's you know, the best way I describe it is really just the way you operate. It's ISO. For those that know ISO, that's effectively ESG. You're basically monitoring what you do, checking it's right, checking the risks, and making sure that you are doing the right thing. And if you're not, how do you change your systems to correct for it, set your targets, and go to the next side? So it's good operating practice. So I think no matter what you're doing, whether you're an explorer or a developer or a miner, there are aspects of it. So in Zambia, for example, we now recycle about 40% of everything that we consume on the mine goes back out again. I mean, there's some things we can't recycle for various reasons, and there's even waste food, which we actually give to the local villagers for their pigs, which so ultimately gets recycled in a slightly different way. But, you know, these are aspects that you can have a look at that have benefits. The way that you do your governance, the way you look after your people are all part of that. And that doesn't matter whether you're an explorer or a miner. The other side of it is it's really important to the lenders. You can't borrow money from the majority of the global lenders out there without a full ESG audit. And increasingly now, the utilities demand ESG. So all of the European utilities will not buy uranium from you unless they do an ESG audit. We're increasingly seeing the governance rules, particularly in Europe, demanding not just scope 1, scope 2, but scope 3. So the utilities are now pushing down their emission scopes down to, and that's where it's going, is that we're going to have to put more pressure on where we are going from our ESG requirements to be able to report back up again. So while we don't have to report against them, we are going to have to provide the information to our customers because they're going to need them in the future as well. So you do have to look at it across the whole chain of your business. It's not just you in your isolation, it's everything else around it.
Obviously, for the audience that are listening, some may invest in companies or invest in the mining industry. Why should investors look at GoviEX as part of their portfolio?
Oh, well, we've talked about the two key things here. One is the uranium price is absolutely fantastic. I mean, it is finally turning around. And we've just been doing investor calls this week. It's been a target, and we did 8 yesterday in 4 hours. And it was like bang, bang, bang. And we did that again on Monday, and we have another one straight after your call today. And I've got a whole round on Monday. So all of a sudden, we've got this real wake up, and a lot of people who've not been investing in the cycle. It made the front page of the FT the other day. It's in the Economist as well, I saw. So, a commodity that has been pretty well ignored is now suddenly getting shunted to the front. So one thing you as an investor are always looking for is momentum. The momentum is definitely in the uranium market. As we said, we're massively undervalued. We've got 2 great projects. You're getting one of them for 1/3 of its value, and the other one you get for free. And it's a complete leverage. So if that changes around, you get all of that uplift that's sitting there in that project as well. So there are many good reasons to be investing in GoviEX.
Yeah. And lastly, as a conclusion, just wonder if there was anything else that you'd like to add, and also what does the sort of next 6 to 12 months look like?
Well, let's start with that one. Next 6 to 12 months for us, obviously, a lot will depend on what goes on in Niger. If that one gets resolved, then we restart all of our debt conversations, move forward to looking to close that financing as quickly as possible. Our target was to get into production in Niger by 2026. That's still a possibility, but we would need to get clarity. In Zambia, by mid-year next year, would be looking to get out a feasibility study and start its debt conversation, looking to target roughly 2027, then depending on Niger for development. So there's plenty to look forward to as a company going forward. I think we've covered all the key. It's, as you said, why invest? Uranium market, and more importantly, where we are as a company and our valuation.
Yeah. Daniel, really appreciate your time. I know you've, as you mentioned, had a busy week talking to investors. So I really appreciate your time. Obviously, wish you well for the remainder of the year going into next year. If our audience wants to obviously follow your story in GoviEX, how can they go about doing that? Obviously, you mentioned you are on Twitter. Is there any other social media platforms you're on?
Well, the best place is actually just go to our website at GoviEx.com. If you've got any questions, send them to info@GoviEx.com. And between those two, you'll pretty well pick us up. So that'd be a great place to start.
Yeah, and we'll include those in the show notes accompanying this as well. And obviously, you're going to be at the Resourcing Tomorrow event at the end of November, where you're going to be speaking. So again, please, those that are still listening, please go and book your tickets. All the details are accompanying show notes. And obviously, you can hear more about GoviEX. And if you've got any questions, you can obviously ask Daniel in person. So really appreciate your time again, Daniel. Thank you very much. Those that are listening, thank you. Appreciate your continued support. Please share this episode with people in the mining industry, but also people outside of the mining industry as well. We need to, especially around uranium, it might have I suppose, a negativity around uranium because people don't actually understand what uranium is. So appreciate if you can pass this episode on to other people outside the mining industry to educate them as well. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, Happy mining, helping each other to improve the mining industry.